Well, it's a very good morning from me, and it's a very good morning from him. So, welcome everybody to my mortgage live stream. I hope everybody's well. Hope you're good. Hope you're enjoying this lovely late spring or early spring weather we're having here in the UK. It's hit 20 degrees yesterday, the mercury, so that's pretty warm for us, isn't it? Anyway, enough of that. Let's get on to our topics today. Everyone's talking about interest rates at the moment, aren't they? About going up, and people getting really nervous and worried about it. It's not really a massive deal. I mean, interest rates have been high before the financial crash. Interest rates were 6 or 7% at one point, and we had inflation as well. The inflation's a bit of a killer at the moment, and the cost of living's causing all sorts of anguish. But the world's not crumbling down, guys. The world does continue onwards, and much, of course, in the mortgage market is not geared towards affordability so much. Remortgages and all those good things, and buy to lets. There's an awful lot of mortgage business to be had by everybody as well. And there's also talk about a recession next year as well. And I don't know, everyone's talking about these things. We can often talk ourselves down of business, can't we? Anyway, let's get on to our main topics that I wanted to chat with you today. We're going to take a look at leasehold reform to start with. Just a quick look at leasehold reform. And then I want to give you some ideas around your sales process, how you operate as a mortgage advisor. Because more and more mortgage advisors now are operating on a kind of a virtual footing, if you like, or online, call it what you like. And they're now starting to look at their sales process and adapting it accordingly. So I've got loads and loads of feedback from successful mortgage brokers, mortgage advisors who are operating virtually. So we're going to talk about that as well. But first of all, though, let's get into the subject of leasehold reform. Let's get serious, shall we? So I'm going to go over to the whiteboard for this one because I can and I will. So let's head over to the whiteboard and let's talk about leasehold reform for those of you who are doing your CMAP2 exams, or you just want to keep up to date with what's going on. So we're talking about leasehold reform. Now, this is bang up to date, this one for you. Leasehold reform we're talking about here. It's bang up to date. So it's 2022. There you go. And this particular Act of Parliament is getting royal assent. Well, it's got royal assent in February, but it's actually going to start in June 2022. So that's actually next month, depending on, of course, when you're watching this video. So what's happening with leasehold reform? Well, for those of you in the know, you probably read last year, the year before, about the debacle with new homes builders and leasehold houses. When I read about it, I was astonished how they actually got away with it. But anyway, let's get into what that's about. So what happens is that when you have a flat or an apartment block, so there's our typical apartment block there for you. And these are often in England and Wales, of course, owned as leasehold, because that's the way we operate in England and Wales, leasehold. Now, it's great having leasehold because there's a lease that controls all the external parts, and there's a maintenance charge that gets put into a pot, and everybody pays for common maintenance of the property. And that's fine if you've got a block of flats. Now, with leaseholds also has what's called the ground rent. So all owners of the leaseholds pay a ground rent. Now, the ground rent is not like a rent that you pay if you're renting a house. This is just a small token amount of money which goes towards the freeholder. It's kind of like a little bit of a payment. Many of them are very, very small. Now, houses, there's a typical sort of terraced house there, or semi-detached property, nice little property there. Houses, with a lovely door there, in this country are normally freehold. But not a lot of people know this, but there's approximately 4.5 million leasehold properties in England and Wales, 4.5 million. And they comprise the flats, obviously, but also some houses. And what happened is that leaseholds began more popular in the 1980s and 1990s. And they allowed builders who built these properties, of course, to designate them as leasehold so that they could earn a nice little revenue stream called the ground rent. There you go. So builders started building flats, of course, but they also started building houses that made them leasehold, which seems crazy, really, isn't it? Because there's no need for a lease on a house. A house, you own you own the land and the sky and everything around it. But this little revenue stream that they started to was very, very beneficial for developers. And what they would do is they would package all the ground rents, all the properties they had, and put them into kind of like a mortgage-backed security kind of arrangement and sell it to a fund manager who would then buy it at a premium And they would then keep it for 20, 30, 40 years, reaping in all those ground rents. And builders made a nice, handsome profit from this. And it's not illegal. It's perfectly legal to make a house leasehold. It's not illegal at all. Immoral, yeah, I think. I know some people have got these things. But the problem was, of course, that these ground rents started off at quite small amounts of money. But they built into the contract that they would increase, they would go up in value. They would double on some occasions. Now, they spoke to the UK equity, UK finance people to make it all very legal above board, but they had this kind of progression where the ground rent would increase. And as it starts to increase, it starts to double. Now, of course, if you double things on a regular basis, double becomes bigger and it becomes even bigger and bigger. And suddenly, these people who've got these houses and looking at these ground rents saying, hold on, this is actually an awful lot of money that we might have to pay in 10, 15, 20 years. And it's affecting the value of the property. Anyway, cut long story short, government came along and stopped it because it's wrong on all levels, isn't it? So as from, let's get the dates here for you. As from June, there we go, 2022, what they're going to do is they're going to abolish ground rents. Simple as that, really. So any new property that's created, new flats or new houses made leasehold, they're no longer going to be charging a ground rent. So they might have a look at a peppercorn ground rent, which is like £1 a year. It's just nothing really. But essentially, they're getting rid of ground rent altogether. And that's pretty good stuff. That's the right way to do things, isn't it? Think about it. Now, it's not retrospective. That's the key thing. So any existing properties that have already got ground rent on them, they're not going to be able to stop that with this Act of Parliament, which, you know, fair play to that. But there is a change afoot, and they're looking at bringing in new legislation maybe next year, which will allow a lot easier to get rid of the leasehold status, maybe buy the freehold. They're looking to allow you to extend the lease to up to 990 years as well. They're looking at that. They're looking at getting rid of the marriage value. You know, when you extend the lease, you have to pay a large amount of money because of the increase in the value of the property. They're looking to get rid of that as well. They're looking to make it easier to actually buy the lease or extend the lease or buy the freehold. With an online calculator, so you can work out how much it's going to cost. It's going to be much cheaper. So what we'll probably find is that existing leaseholders will have a very easy way of getting out of their lease situation. Whether we'll turn flats into common hold is another issue, isn't it? But it's for houses, I think, is the key one here, isn't it? So yeah, lots of things going on. They've also sent this on to the Competition and Markets Authority, who are investigating the builders, the new homes companies that have done leasehold houses. They're investigating it now. They're looking for any potential mis-selling going on. Arguably, there probably was a lot of mis-selling, and you might have some that's kind of got the class action suit. I don't know what's going to happen. Obviously, it's not FCA regulated, is it? But they are looking to see what they can do about that. So that's the Leasehold Reform Grounds Rent Act of 2022. About time too as well. I think that's a good thing. Get rid of that nasty thing about making houses leasehold. What a ridiculous idea. Anyway, I hope that's been useful. Bye. All right, you enjoyed that one, did you? That was just an update for you on some legislation that's coming in, of course, which is important to know. If you're doing your CMAP, they probably will bring that act into the new syllabus in July. But you should be up to date anyway. Don't just wait for new syllabuses to be issued. You should be up to date if you're going to be a mortgage advisor, because your clients will ask about this, particularly if you're in your new homes marketplace as well. It's very important that you keep up to date with things as they go along. So let's talk about your sales process, Andrew, for the next sort of 5-10 minutes or so. We'll talk about your sales process as a mortgage advisor, financial advisor. Call it a sales process if you want to, or an advice process if you don't like the word sales. And I'm okay with that. I'm big enough and ugly enough not to worry about that sort of thing. But the whole point behind having a advice process or a sales process is it helps you to generate business, to upscale your business, to maybe bring new advisors in, to give advice that's the same for all customers, to keep that level of customer satisfaction high. So it's good to have some structure in the way that you operate with clients. And as a result of many mortgage advisors going virtual. In other words, they're using video to talk to clients. More and more are doing that now. More are doing it than not now, which is quite interesting. A lot of the new people coming into the marketplace are adopting the virtual marketplace as well. So got a few ideas to share with you on this one then. I'm going to put a couple of slides up as well. So what I'll do is I'll bring the slides in with me, shall we? There we are. Ta-da! You've got me. Well, where are the slides? That way, aren't they? There they are. There's the slides. You can see them there quite clearly. So I'm talking about the 15-minute mortgage discovery call. Now, the question really to ask yourself, and by the way, there's the book that covers all of this. There's a little bit of a plug there for you with the new book. Come on to that later. Here's some questions to ask yourself. First of all, do you give free advice? So as a mortgage advisor, do you ever find yourself giving free advice to clients, particularly if you've just contacted them and they're chatting and asking questions and you're giving general advice, if you like, not on the mortgage side, but general advice and information? Are you giving free stuff out to people? And you're a little bit concerned about that because you've got bills to pay like everybody else as well. When do you stop prospecting and start advising? Now, if you're having to prospect or lead generate for new business, and who doesn't, let's face it, when do you stop prospecting and advising? Where's the cutoff? Because you can carry on prospecting and convincing clients to use you, and they'll start getting free advice. And that's not a good thing, is it, if you think about it? When do you start the time clock? Now, lawyers and accountants, they have a time clock, don't they? They start the time clock, start charging. When do you start it? Or is it embarrassing to start? Or is it, the first fact-find meeting that you do, you start it? It's all just a difficult conversation, isn't it, if you think about it? And what's your call to action when prospecting? So when you're talking to somebody, maybe a bought lead, and you're on the phone to persuade them to come along and talk to you about the mortgage, what's your call to action? Is it like, to have a 1 hour fact-find meeting? Or is it a lot easier for the client to take? A call to action should be simple, you see, for people to action upon, rather than a great big decision to make. Now, all these questions make you think about the answer, and the answer, of course, is the 15-minute mortgage discovery call, as we call it. So where does the 15-minute mortgage discovery call fit? Now, it fits, of course, into your advice process. And here's a picture for you of your current advice process. Well, it could be your advice process anyway. Let's make it slightly bigger so you can see this, actually, because you probably want to see this in a bit more detail. This is typically how a mortgage advisor, a modern one, would work nowadays. First of all, they'll do their lead generation. In other words, they will generate leads in whatever way they do it, referrals, buying these off the internet or whatever it is. Then they have the 15-minute discovery call. And we'll talk about this in a second or two, because it's the stepping stone, if you like. Following the discovery call, we then have an affordability and costs conversation. Following the affordability and cost conversation, we then have the fact find. Now, many advisors have one great big meeting to cover everything, and that's fine. But lots of new virtual advisors are having small, shorter meetings to do these things. Then you're going to do your sourcing, aren't you? Sourcing of the right mortgage. Then you're going to give your advice and close the sale, if you like. And then finally, you're going to have a mortgage offer meeting once the mortgage offer is completed. And then finally, you're going to have a post-completion meeting. In other words, when the mortgage is completed, you're going to have another meeting to wrap things up. Now, it might seem quite long-winded, but these are short meetings. These are not long-winded meetings like in the old days when you had a 2-hour mortgage interview. No, these are not like that at all. So what's the objective then of the 15-minute mortgage discovery call? Well, the objective, as you can see here quite clearly, let's just put us both in there for you, see, is to gain commitment from the client to progress to a fact find or to an affordability conversation. The whole point behind the 15-minute mortgage discovery call is it gives you the opportunity to have 15 minutes of complimentary time where you set the scene and get things moving. And then, of course, you get to talk about your fees and things like that. So let's just talk through how the 15-minute mortgage discovery call works, the kind of things you might want to put into it. But remember, the objective is this is complimentary. This is on your dollar or your pound. And the objective is to get commitment from the client to progress to the next stage, which might be a fact find or affordability meeting. So what are the steps involved then? Again, I'll put the screen up bigger for you so you can see all of this then. Here are the steps, suggested steps for a 15-minute mortgage discovery meeting. The first thing you're going to do is you're going to break the ice. You're going to chat about anything you want to. I got the 3 F's there: family, fun, future. You can do what you like. This is about building rapport, having a bit of a chat, isn't it? Breaking the ice. That's important to do that. But remember, this is only 15 minutes, so you can't do too much of that. The next thing is your value proposition. You're going to propose exactly what you're all about. This is your soundbite, your elevator pitch, call it what you like, your story. This is your value proposition. This confirms how you operate in the marketplace. You'll then want to sow the seed for referrals later, and we talk about that in other videos. Then you want to get into your FCA authorization and status, because you have to, and it's the right thing to do, because it's very beneficial to the client to know that the watchdog, you're fully authorized with the FCA, the public watchdog that looks after the mortgage sector, and you're fully authorized and trained to give mortgage advice. You should do that, and that's something to get over at that point. Then you want to talk about the customer's overall goals and aims. So chat to them. Why is it they want to talk to you? What's their objective here? What's their goal? What are they trying to achieve? Is it development finance? Is it to buy a new home for their family? Is it about upgrading their property? What is their goal? And they will talk to you about that. And you can get a good insight into what they're up to by asking questions around that. Then you want to qualify the customer. Now, with the phrase qualifying, what we mean there is you want to make sure the customer is a good fit for your business model. You shouldn't deal with every single person that you talk to. People that start off tend to do that because they're looking for business. But you need to qualify the customer. How motivated are they? Do they have the ability to purchase? Do they have the need to take a mortgage? And are they having the relevant time scale? MANT, we call it. That's called qualifying the customer. Then comes the big one. And this is your trust, gauging their personality. If you've qualified them and you think they're a good fit, then you want to start building trust. And then you want to disclose your fee. You want to lay out the value of what you do. How do you operate? What's the value that you provide clients? And then you want to illustrate your fee. That's when you get the discussion. Again, another video on that one for you. Might do that one next week, week after, on how you can sell your fee. But if you're charging a fee, of course, you should tell them now. You know what their goals and objectives are, so you will have a very good idea of what kind of fee you're going to charge. Because many brokers, they leave the fee flexible, don't they, according to the amount of work involved. Now, they've told you what their goals are and you've qualified them. You know roughly how much work is going to be involved now. If you don't, you should. And then the final thing, of course, once fee disclosure, is you want to gain commitment, agreement to proceed. Because you qualified them, you want them as a client, you want to get that commitment to proceed. And of course, once you start proceeding, let's just put myself back over here for you. Once you proceed at this point, then the time clock starts. Your fee has been agreed, of course, you've laid that out to the client. They said, yes, I'll be happy to pay that. The value you're going to give, that's brilliant. Let's go ahead with this. Let's do this now. So whatever paperwork you want to issue as a result of that is fine. But you see, after 15 minutes, you've got a really good understanding of where the client's going, what their goals are. You know what kind of client they are. You've qualified them. They've agreed your fee. Everybody's happy. It's very professional. And then you move on to the next part of your sales process. So that is the 15-minute mortgage discovery call. Good enough. It does work too. It really does work. There's plenty of advantages of having that system built into into the way you operate. It really does work. Well, let's wrap up our live stream on that point, shall we? We might do a few more of those for you on the mortgage sales process, particularly how you introduce your fee as well, because that's an area that a lot of mortgage advisors are very wary about. They're very unconfident about doing. And I've got a few tips and techniques to share with you that successful mortgage advisors use and mortgage brokers do when you charge fees, of course. But it's all done at the 15-minute mortgage discovery call. Great. So what's going on in our world? Well, we've got the new cohort starting next Monday. We've moved it a week because there's so many bank holidays mucking things up. So we're starting on Monday next week for our new cohort, our new summer cohort, where we take about 20-odd people through 4 months of CMAP, get your CMAP done by the end of the summer, really. So that's starting. I'm quite excited about that. Still doing our CMAP 3 podcasts on Saturday morning, which are complimentary, and we're recording those, and we're going to launch those onto the market later this year as well. New syllabus coming in June, so we're busy updating everything for you as well, keeping things moving along. Other than that, that's our world. I hope you're well. I hope you're going to enjoy your week. Try and get out and get some sunshine, because it's warming up beautifully at the moment, isn't it? And getting quite busy as well, which is lovely to see. Have a great week, everybody, and I'll see you next week. Bye. And I'll leave you a little picture of my books. Yeah, let's put my books up for you so you can see my little books, or a bit of a plug there for you. There's the new one by the top left-hand side, The New Rules of Mortgage Advising. On Amazon now as well, so you can get hold of that. So enough of that plugging. I shall stop there and see you all next week.